Investors and traders, welcome to the channel. Today is 17th of September 2024. Hope everyone is having a great day. So tomorrow is going to be a really important day in the markets because we'll have the FOMC meeting where the Federal Reserve chairman will be making an announcement about the Fed fund rates for the US market. And now it is widely expected that the Fed is actually looking to cut the interest rates, whether it is going to be a 25 basis point cut or it's going to be a 50 basis point cut, which is half a percent, or more. We'll have to wait and see. It's just my opinion. I believe that 25 basis point cut might disappoint the market. Anything greater than 50 basis point might actually give a signal to the market that things might be on the economic fronts much weaker than what is out there. So this is why Fed is more aggressive in cutting the rates. And so probably we might actually get a 50 basis point, which is half a percentage point cut. But we'll have to wait and see and what sort of price action we get from the market. And as always, this video is for educational purposes only and it's not a financial advice. So it is really interesting that what the markets did today, because actually the Fed started their meeting today and the meeting concludes tomorrow with the interest rate decision. And after about half an hour, I believe the press conference starts. At times, it's quite fun to actually watch the press conference because of the questions that get asked. A lot of times, I believe that the response is actually kind of pre-prepared, but sometimes it is not because of the nature of the question or the Fed chairman Jay Powell. He might want to elaborate and give his views on certain topics. So it is at times pretty interesting to watch, and I will actually try to watch it tomorrow myself to get some clarity as to what the Fed is looking going forward. So what we are looking at the screen is the daily chart of the Nikkei 225. This is the Japanese stock market. This stock market made a new all-time highs back in July, and I believe it was after a very long time, something like, I don't know, close to 40 years that this market was actually making new all-time highs. I could be wrong on that one, but it was making new all-time highs after a very long time. Now the key thing is that we are actually getting very close to a key timing, which is coming in on the 19th of September. Actually, timing has kicked in already because with timing you have to give it 1 to 2 trading days on either side. And an interesting thing about this market is if you look at the US markets, which we'll do in a moment, this market is actually way below its peak. So this market actually peaked in 10th of July, and we have this trend line. You can join these 2 points here, and the market is actually fairly below this. So really interesting what is going on with the Japanese market, and it could be because of the strength that has come into the Japanese currency. So we are actually going to take a look at the Japanese yen versus the US dollar. Here we go. So this is a really key chart. Now the Japanese yen is the second most widely traded currency in the world. The first one is euro. Euro is the biggest one, followed by Japanese yen, and then the third one is the cable, which is the Great British Pound versus the US dollar. So here you can see that this day, this big bearish day on the 11th of July, this is when the CPI or inflation data had come in, and it was a little bit hotter than expected in the US. And this is also where this whole carry trade began to unfold and the Japanese yen began to strengthen. This is like more like a crash in the currency markets because currency markets are several times bigger than the um, stock markets. And the interesting thing is it bottomed on the 5th of August, and then it had a retracement right to the 38.2%. This is something which we had actually plotted in advance and we had been pointing out to the subscribers. And then what it has done is actually went below the 5th of August lows, and it actually tapped out the lows of December 2023. And what the market has done now, and closed higher, and then 17th of September, what the market has done is got a really a beautiful looking strong bullish candle. So actually the US dollar strengthened against the Japanese yen. So it's really interesting because it's possible we might have seen a double bottom here, confirmation pending. And if you look at this green shaded area, this is also pattern completion because we had this blue ABCD and not quite the bottom it picked, but it was pretty close. Now I have not done an extension of it, but just by the looks of it, it looks like a 1.272 extension of the CD swing. AB swing projected from C, point C is 1.272 extension, is what it looks like. And then right to the bottom was actually this swing 5th of August lows to the highs of 15th of August. It expanded by 1.272, pretty much tagging the exact bottom. So whenever you have a confluence of two or more coming of patterns or the Fibonacci ratios coming together in a closed confined zone, it's something which we pay really close attention to because of the harmonics involved. After that, good to see a not a confirmation but a bullish day. And in my opinion, if the entire 38.2% retracement of this swing high to this low, it's taken out to the downside, to the upside, then okay, it will give us a lot of confirmation. And one more thing that I would like to also take a look at this in this one is actually the concept of symmetry. So this is the highest retracement that we have seen, and if we just point it right here, so getting above on closing basis above 147.50 would actually mean that we might have seen a pretty good bottom, which turns out to be a double bottom, and we could see further strength come in the US dollar with that versus the Japanese yen. With that, let's take a look at what the dollar did today, just the day before the rate cut announcement. So here we go. From our perspective, 107 is a very strong resistance for the dollar. We saw a top double top double top here, and in fact this is a big trading range between 100 and 106. So 150 to 106.50 has been, or 107 has been a big trading range. And what the dollar has done is it has retraced pretty much all of this range, and you can go and have a look on the chart. Here we go. This is pretty much what the Japanese yen did as well. 28th of December, it tagged its lows, and today it actually closed higher. Now, the really key point is that there is a possibility that the US dollar is actually getting stronger. Now, it's really interesting to see that just the day before, the Fed will make its announcement that this is what the market is doing. But of course, it's pending confirmation. There's also a smaller ABCD here, which I've not drawn, but you can see A, B, C, D comes around here, but the structural support is there. Now the real key thing is for the US dollar to really weaken and that the decline accelerates. It needs to close below this 99 level. That is the 61.8% retracement, and this is what has held this decline from the 2022 highs. And then the lows coming in July of 2023 last year, and what it has done is it has come and it is testing the bottom of this trading range. It's come into this gap formation, it tagged the first boundary of it. There is a slight possibility it could actually come to the middle of it, maybe towards the bottom end of this gap formation as well. But if it begins to close on the weekly basis higher in positive candles, then we might see actually some retracement, which could see this market actually retracing right up to where we see the 20-week moving average and the 89 period moving average, so around 103.50 level. That is possible, so we could see some strength come in the US dollar. So a really key market to be watching. And it's really interesting to see how the market is kind of setting up a day before a really key announcement. And if on the flip side, the market actually becomes really weak, then the support is around the 99. So 99.50, 99 is the key level. It's only on closing basis if the market is able to close below this level, and in fact I would like to see a weekly closing that we could see that okay, US dollar is actually getting really weak, which should actually help other currencies, maybe gold as well, metals, precious metals, base metals as well, and we'll cover gold in a little while. Now let's take a look at what the treasuries are doing. So we'll actually go and have a look at the shorter end of the curve. Here we go, and you can see that this is also finding support. It's right into this gap formation which we have been discussing for quite some time, and it tagged the lows of March of 24th 2023, and the yield actually rose a little bit. So that's kind of support coming in, and just a day before the Fed makes an announcement. And let's see what the 10-year yield was doing. So we'll take a look at the TNX, and we can also see that it also closed a little bit. Well, it's a bullish candle, but the trend has been down. Now let's take a look at this one on our futures chart, because this is something which we have been following for quite some time. And here the interesting thing is, and this is where I think from a technical perspective, I need a resolution. I need the market to actually confirm a few things for me. And the biggest thing is that it has completed this big ABCD pattern right here, and then the market actually declined, and it went right into this concept of symmetry. So this decline is identical. So the symmetry is there. It's not that it turned more bearish, because the decline is what we have seen previously as well in this leg higher. Now what it has done is today it's a bearish close, but this market was not able to take the highs out of 11th of September. So the high was 115 and 23 seconds and 115 21 seconds and a half. So this is a really interesting development, because what it means is that today the yields were actually a little bit higher than what they were on the 11th of September, and this is what we also saw on the TNX chart as well, which displays the yields. The other thing is there's also a little bit of a pattern formation right here. So if I were to take the highs and the lows right here, you can see it went right to the 115 and 25 seconds, which is the 1.72 expansion, and the 1.6 point of this little wave is a little bit higher around 116 22 to 117.07 is where we have pretty strong resistance in the market, and we have the 38.2% retracement nearby as well. So the chances are maybe it wants to go and hit the 116 to 117 level, but the key will be how the day will close. Whether it will close bearish or bullish, meaning that whether we'll see the continuation of this move, because we are completing this big ABCD, and then there are some key resistance levels coming in as well. Whether that's the end of this move, and we begin to see a retracement slash correction take place, we'll have to wait and see. Now the other thing that happened is basically here. If we go and take a look at the bonds, so this is the 30-year duration bonds. On the weekly chart, you can see that the ABCD is much higher. So the point D is 131 and 26 seconds, whereas the 10-year Treasury note has already done its ABCD at least. And the other thing is, let me actually show you where the 38.2% retracement comes in, which actually comes in a little way further, 139 140. So this is what the bonds are showing in terms of its pattern. So it looks like the bullish move is more likely to continue for the bonds, which are 30-year long duration, but the 10-year is actually completing its patterns, and this is where I need further price action to give me more data points, because these things they kind of move in tandem. So usually these are all interest rate instruments, and usually they are not too far off from each other when they move. So you can't have like what we have seen in the indices, that Russell 2000 doing something else, Dow being bearish one day, and NASDAQ being bullish. They usually tend to go together. We will see that one market becomes slightly stronger, which means that it might be um, having lower yields, and vice versa, compared to, let's say, 10-year might be a little bit stronger or lower yield than the 30-year duration ones. That's kind of expected because that's 10 years in duration, that's 30 years in duration. The investor would want more yield for taking more duration risk and the reinvestment risk of the coupons. And well, these are treasury bonds, but in a corporate bond, you'll also have the default risk, so many things to go with it. So here, the bonds on 17th of September took the highs out of 11th of September. So this is really interesting because what it's showing is, if you were to, in your mind, think about the yields, then the 10-year treasury note actually yielded lower at one point on the 11th of September than it did today. So there is a little bit of hump within the curve. I don't know if you'll be able to imagine this in your minds. I think I need to have some sort of a picture to show what I meant, but it's really subtle, but it's there. So that is really interesting to see in the yield curve structure the day before Fed possible rate cut announcement. So really interesting. So in my opinion, the interest rate markets are going to be much more important to watch tomorrow after the event, and also for the rest of the week, than the equity markets, because it's really interest rate sensitive decision, which is going to impact these markets and currency markets a lot. Okay, so with this, what we are going to do now is we will actually go and take a look at the US markets. So let's take a look at the S&P 500 cash. So this is the cash market. Another record-breaking day. Today the high was on the S&P 500 cash 5670 and 81, spot 81, and then this breaks the high of 16th of July, which was 5,669, spot 67. So there we go. So it made a new all-time high, and it closed bearish for the day. If normally in a really strong bull run, I would have imagined really strong close higher, and then the market really storming higher. But this is what the price action has been. It's just taken it out by a bit, and then it actually closed lower for the day. Now we do have some longer term patterns, but if the price action remains like this, we'll have to actually we'll be paying close attention to the price action. But the ABCD does point higher prices, which maybe at some point in 2024 we might reach those. NASDAQ, we've already done that, and NASDAQ is showing a slightly different pattern. But before we take a look at NASDAQ, let's take a look at what the futures market did. Now we have a big gap today, and that's because of the rollover. So the futures contracts yesterday and today, they have been rolling over to the December contracts, and there is actually a premium built into the December contracts compared to the September contracts, and this is why we see this kind of a jump. So this is why today it was really important to actually take a look at what the cash market did. So it's also making a newer high, but it also closed. You can look at this doji indecision kind of a trading range altogether for this market as well. And the longer term, on the weekly charts, we do have slightly higher targets as well, but this is what the futures markets are doing. Now let's take a look at the cash index for NASDAQ. So let's take a look at NDX. This is the NASDAQ 100 index. It is showing a different kind of a pattern. It's not, it did not make a new all-time high. That's because I'll show you on the weekly chart on the futures. We have this big ABCD completed. But what I also see is this trend line like this. This is something which we took a look at yesterday in XLK and QQQ. So it's just finding resistance right here because the trend line right in the 78.6% retracement. The chance for it to actually get there and close the gap still exists, but if it begins to find resistance from here, I think we could see a rotation lower perhaps. And then now let's actually take a look at the futures chart. Again, we have this gap because of the rollover, but we have uh, similar kind of trend line there as well. But what I really wanted to show you on the futures chart was this actually. Here we go. For new subscribers, this is the big ABCD that we have been tracking. The market went and clicked this right to the tick and closed lower, and then the following week was actually a sell signal generated, and then on the 5th of August we made a pretty good bottom, and then we have been making recovery highs, and the key thing is that S&P 500 making new highs, new all-time highs, and NASDAQ, in my opinion, has pretty much seen a higher, which might exist for quite some time. So um, maybe we go more in a trading range behavior for quite some time before we get a resolution, whether it breaks the 5th of August lows or it breaks higher, and the CD leg begins to continue or extend. So we'll have to wait and see what it'll tell us. And now just moving over to QQQ, just to show you, this is what we covered in our video yesterday. Here we go, and there we go. So that trend line is still there in this as well. Here we go, and it's also right at the 78.6%. I've not drawn this on the daily chart. XLK, there we go, similar kind of pattern formation. And here we go on the weekly chart. We were looking yesterday. I had drawn this and brought to you to your attention that we have this trend line, which is also a 1-3-5 pattern as well. We have 1, 2, 3, 4, 5, and you can also actually, if you wanted to draw, you'll have like some sort of a pennant formation like this. One of the things with these kind of wedge formations, the pennants and triangles, is that when the market breaks out eventually, it's a pretty dramatic move. So let's see what it's gonna do. But this possible 1-3-5 pattern or this trend line is exists in the XLK stocks, and the S&P 500 made new all-time highs. Let's see what the Dow Jones did. So on the cash market, you can see it also made new all-time highs in the Dow Jones Industrial as well. And this is what we have been discussing in the weekly video, that this 42,260 level, which is the 1.6 expansion of the 2022 bear market, the market actually might go and tag that, and that's like a shorter term target, but it could also be a resistance level. So market became very, very close to it. 40, what was the high reached? High was 41,835. It missed it by about roughly about 400 points, a little over 400 points. But that's these days is nothing for the Dow. So we have a target, but also a pretty good resistance level coming up in the Dow Jones as well. And if we would just quickly take a look at what the market did in terms of futures, futures on the weekly chart is not going to show us the gap, but here you can see, here we go, that's the after making new all-time highs, but also there's a gap because of the rollover. The market reached its 1.618 expansion on the futures chart of this recent 1st of April correction that we had in April. It has done that, so we have seen the market just close. It'll be interesting to see what sort of a follow through we get tomorrow. But it's just been a trading range behavior. But you can see the market's actually closed pretty much low, a little bit lower. And then let's take a look at, last but not least, in the Russell 2000. Here we go. On the daily chart, Russell 2000 did perform better than some of the major indices, such as the S&P 500, which actually closed negative for the day after making a new all-time high. This one seems to be catching up, but it's got a fair amount of resistance right here, and then a fair amount of resistance from the highs it had reached back at 31st of July. So really interesting to see how these markets are setting up before the key decision coming out tomorrow with regards to the interest rates. We see actually some strength coming into the US dollar. We see the yields retreat a little bit today, and whether that's something that will continue, Tomorrow we'll have to wait and see. Now, if we just think about what the interest rate, lowering the interest rate might mean, it actually means the yields should move lower and the prices in bonds move higher. But they have already moved much higher. So even if there is some impact on, let's say, on 10-year, I don't think it's going to be that huge an impact. And I've already shown. Let's actually have a look at those levels one more time on the 10-year. I believe the 10-year is going to be much more important than the 30-year. So here we go. So we are about a couple of points away from that 1.618 expansion, and of course that 38.2% retracement is coming around 116 and 14 seconds. So there might not be much for this. For the 10-year treasury note to go from here, which means that the yields might be close to actually tapping out. So it'll be really interesting what the patterns are telling us and what the actual on the fundamental side of things an interest rate or the paradigm shift could do. But it's possible that a lot of that has been built into it, and the markets actually have been working on, okay, the cut in interest rates is coming, it's coming, and now you get that cut. Either you are a little bit disappointed because it's less than what was expected, or something else, and then the markets actually begin a correction from these levels. And it could be a pretty good correction because you can see that for several months this market has been going up, and it's been one of the best performers actually in the last few weeks and months in terms of giving the returns. Now that's great. So really interesting. I'll do a video tomorrow as well after the Fed has done their announcement, and we'll see what the price action is like at the end of the day, what sort of pattern formations took place, some of the levels that we have discussed today, how they fared with the price action, and of course tomorrow is a key data point, but it doesn't end there. Thursday we have key data coming out as well, so this whole week, Friday is a little bit quieter on the economic front, will be really key how this pretty volatile, I would imagine, part of the week is starting from tomorrow. So we'll have to wait and see what sort of price action we get, how our patterns will fare, what the patterns will do. So thank you very much. Apologies, a longer video, but we had to cover quite a few things just before a key economic announcement coming tomorrow. So wish you good luck and good trading, and keep safe and keep strong. And I will speak to you guys soon. And with that, I'll leave you guys now.